Hello, traders, and welcome to Simpler Trading. So glad you could join me today. My name's Melissa, and I'm a trader here at Simpler Trading in the Trendy Trading Room. Today, I wanted to bring it back to the basics. It's easy to forget if you've been trading for a while that we all started out somewhere, right? At one point, we were all just beginning our trading journey. And I think it's important to look back on just some of the basics in trading. And if you're new to trading, welcome. I really believe that this video will help you understand key terminology in trading. And today I want to talk about what is support and what is resistance. All right. So, first off, every successful trader knows this. The market respects levels. Support and resistance are the building blocks of price action. In this video, I'm going to break down exactly what support and resistance are, why they matter, how to spot them, and how you can trade them with confidence. If you're brand new to trading, don't worry. I'll explain everything in simple terms, step by step. And by the end, you'll see the market completely differently. All right, let's start off with what is support? Support, the easiest way that I can describe support is if you think of support as a floor. Now, when trading support and resistance, I don't just trade them as a line, I trade them as a zone. And so the top of the support, I would look at that like a baseboard on your floor. And then the bottom of that zone, I would look at that as the floor itself. All right. So on this chart, I have pulled up right now a 4-hour chart of SPY or the S&P 500 ETF. All right. It's a 4-hour chart. So when looking at the support and resistance levels on this chart, this is more for a swing trade. By swing trade, I mean a trade that I would intend to be in longer than a day. So think of it like a trade that you're going to put on and don't plan to exit for a week, 2 weeks, even 4 weeks. Okay. So let's first figure out how to identify where the support is. On the chart, I took off all of my indicators. This is absolutely a blank screen just with candles. Okay. A candle, you have two different parts of a candle. The rectangle part here is what we call the body. And then this just little skinny line at the bottom, skinny line at the top. These are the candle's wicks. So as far as candles go, you have a body and you have the wicks. This is important for how I identify support. So if you look at this canvas, right, this SPY chart as a floor for support, you're going to automatically look down at the bottom, right? Because that's where the floor is at. I want you to notice that you have these long wicks down here below the body of the candles. You see them? All right. This wick, when it is at the bottom of a candle, this is buying pressure. This means that buyers were stepping in here and they were overpowering the sellers. Okay. So this is what I first look for when finding where support is going to be. Let's go over to the current candle for today. All right, you have a very large bottoming wick here. So if I was looking for a support level for today, I'm going to first look at where I have this big bottom wick because buyers stepped in here. They overpowered the sellers and price went back to the upside. So this is the candle that I'm paying attention to. Then if I look to the left, do I see more buying pressure as evidenced by these bottoming wicks? And I do. So let's first set the floor. I look at all the bottoming wicks in the range of today's candle, and I want to point out the lowest one, and it's right down here at 628.13. I'm going to color this green just because support equals a place to look to take a trade to the upside, and that's a green light for me. All right. Now, I want to make this a zone, not just one single very bottom line, because you can see if this was my support, this price action would not be encapsulated in this support, right? So now I'm going to go over to the candle structure with these bottom wicks, and I'm going to find where I'm going to place my other line of support or the baseboard of this support zone. What I want to do is I want to make sure that the top of my support zone has each one of these bottoming wicks touching it. So the highest bottoming wick here is today's candle, right? So if I place my support line right there at today's low, and then I move it to the left, we're going to make sure that it is capturing these bottoming wicks as well. So for this 4-hour chart, I've identified that my support zone is 632.95 by 628.13. So to recap, support is a price level where buyers consistently step in and prevent the market from falling further. Think of support as the floor under price. When price comes down to that level, buyers see it as a bargain. They enter and price bounces higher. The more times price touches and holds that same level, the stronger the support is. All right. Remember, support equals demand. It's the area where buyers step in to defend the level. And you can see here, since the floor was created, all these pullbacks to the support zone have been buying opportunities because once price hits this zone, the market is going up. So for a support level on current price action and a place that I would be interested in going long or buying calls, this would be my zone, 632.95 to 628.13. All right. Now let's talk about resistance. We're going to flip it around and basically do the same thing but opposite, looking at or for the ceiling. Think of resistance as the ceiling. We're in a house. Down here, we have the floor, the baseboard. Now I'm looking for the ceiling. And in this, I'm going to again look for the wicks of candles, right? So up here, you got a topping wick. You got a topping wick, a topping wick. Obviously, this is the top of the ceiling because it is the high. Then you have more topping wicks. This these topping wicks, when the wicks are above the candle, this equals selling pressure or resistance because the sellers have overpowered the buyers and price has moved back to the downside. All right. So I want to draw the top of the resistance zone or the very tippy top of the ceiling, and that's going to be up here at the high. Just like I took this low, I'm going to take this high. And I'm going to color this one red. Red equals selling pressure, and a place that sellers are overpowering buyers. So the top of my ceiling is going to be that all-time high in this case for SPY. Now I want to put on some crown molding. All right, I'm going to do the same thing. I'm going to look at these topping wicks, these recent topping wicks, these recent pivots that cause price to go to the downside. And I'm going to look and see where exactly is that lowest topping wick. And it's right here. All right. I'm going to color this red again because it is the ceiling or selling pressure up here. Okay. And there we have it. So now we have resistance or the ceiling that once price gets into this zone, the market turns to the downside. This is our resistance. So now we have resistance and we have support on this chart. Resistance, support. Any questions about that before I move on? I don't want to leave anyone behind. All right, great. I don't see any questions in the chat. So here's our resistance. Here's our support. Notice in resistance that each time the price rises into that level, sellers take profits or short the market and price falls back down. Just like with support, the more times a resistance level holds, that means the stronger that resistance is. Take, for example, on SPY, each time price rallies up into 643.93 by 647.13, each one of these candles, each time they rally up into here, it was an opportunity to sell or to go short, buying puts. All right? All right, cool. So, now that we have figured out how to identify where support and resistance are at, let's talk about some trading strategies that you can use to trade support and resistance. Okay, because that's how we actually make money in the market. There are many, many strategies that you can use. I'm going to talk about the two most common strategies. All right. The first strategy I want to talk about is the bounce trade. All right. What I mean by a bounce trade is this. Back here a few weeks ago, we established a support zone. Buyers were stepping in, buyers were stepping in, buyers were stepping in. We've established this zone right here by using price action as our support zone. So when we get a pullback or price comes back down to our support zone, the first way that you can trade support and resistance is through a bounce trade. So at this level, you would want to buy calls or buy the equity, uh, Probably if you're new to trading, you're not trading spreads, but either way, this is an opportunity for a bullish trade. Okay, let's look at it from resistance as well. Back here, it looks like last week we would have established this zone as resistance. Okay, that meant each time price rallied up into this resistance zone, it was an opportunity to go short the market or play the bounce to the downside. So if you had entered here at the resistance zone right around 643, right? And you had bought puts or sold equity, what have you, however you choose to place a bearish trade, it would have paid to target. And our target is once we have established a support zone and a resistance zone, the target for your trade is the opposite side of this trade. All right. So if I'm long from support, my target is resistance. Now, let me go down to a smaller time frame chart. You can use this same concept on any time frame chart. This is a cool thing about support and resistance. What if you only want to day trade, right? Oh, Kat, that's a great question. Kat asks, once you find the resistance and support, how long do those numbers last? And this type of trade is going to give you that answer, Kat. Okay, so now I want to move to a smaller time frame. I like to day trade off of a 5-minute chart, but I am not going to put my support and resistance based on a 5-minute chart. Now I'm going to take those support and resistance levels off because I don't use a 4-hour support and resistance to day trade a 5-minute chart. I like to use a 2-hour, sometimes a 1 hour to find my support and resistance areas. So let's pretend that we were just today's price action had not happened and I was just looking to create my support and resistance zones for a day trade today. All right, so let's start with the support. I can see here with these bottoming wicks that buyers were stepping in this area. The bottom of my floor or the bottom of my support is right down here at 631.30. Okay, that's going to be the bottom of the floor for me or the bottom of my support zone. Then I want to look at where is that highest level, my baseboard, the top of my support zone, and it is right here on that bottoming wick. Remember, we're pretending like this has not occurred today. All right? So, now this hasn't occurred. I'm looking for where my support's at, and it's right here. Okay, so this has created me a support zone or where I would be looking to go long today. Uh, sorry, forgot what I was going to type. All right, so there's your support. Now I need to create resistance. Obviously, the top is this all-time high up here. So the top of my ceiling or the top of my resistance zone is right up there. And I'm going to make it go all the way over. Just keep it consistent there. All right. Then looking at the topping wicks on this 2-hour chart, I want to know where I would place the bottom of my resistance zone or my crown molding for my ceiling. And that's going to be right here at this lowest topping wick. And I got to have it consistent. Sorry, guys. All right. So now I have a support and resistance zone for SPY. So, Kat's question is, when does these zones, right, the support and resistance, when are they no longer valid? And although this trade hasn't set up yet, let's talk about what it would look like. Okay. All right. So if price, right now, we are playing a bounce from support, resistance being our target. Okay. But if price turns around right here, you see this resistance zone? If I were scalp trading means a very short time frame, going to be in, going to be out. You're going to have a lot of trades back to back to back to back, right? Playing both sides. A scalp type mentality would create a resistance zone right here. Okay. It's not my bigger levels, but more for a scalp idea. Okay. And I'm going to use this to explain the second way that we can trade this price action here. All right. So right now, this is where price is at. I know I have resistance here just from today's price action. This is yesterday. This is today. Obviously, big selling pressure this morning, right? So when does this zone right here, 639.25 to 640.19, when is that no longer valid? It's no longer valid if we get candles that print to the upside. Let me change the color here. All right. And I'm going to draw some candles. So, what if I get a candle that looks like this? Because you know we have Fed meeting minutes come out, and then it looks like this. That is when this zone is no longer valid. When you get a candle that closes above your support or resistance zone, it is no longer resistance, right? Because price has gotten above it. You can either do one of two things. You can remove the zone, or you can say to yourself, what was resistance is now support. Okay. And that brings us to the second way to trade support and resistance, and that would be called a breakout trade. So if I get candles like this, and I know I have a resistance right here at or around 640, and I get a break above there, that is a trigger long or an opportunity to buy calls to play price back up into this bigger area of resistance. That would be a breakout trade. Now, vice versa to the downside, let's say that the Fed meeting minutes is not what the market wants to hear, and you get red candles that look like this. If we break down below the floor, that is a breakout to the downside, and you play price down or buy puts when we break below this floor. All right? Awesome. Very good. All right. So now we know what support is, what resistance is. We know how to identify it. I gave you two of the most common ways to trade it, either bounce trade or breakout trade. Let's talk about some common mistakes that beginning traders make. Number one mistake is drawing too many levels. A cluttered chart makes it impossible to trade with clarity. So you want to focus on the most obvious and most respected levels. The number two mistake is chasing breakouts without confirmation. Breakouts fail all the time, so you need proof before committing. What do I mean? I mean, if you're going to trace a breakout trade to the downside and you take it immediately, then you are at risk of that trade failing. I like to wait for confirmation of lower highs before taking a downside trade once I have a breakout, or vice versa. Up here, I would want to look for lower lows. So I get a candle that breaks out. I wait for that 5-minute candle to close. And then let me go to a 5-minute candle uh, chart so that you can see. Then, once I get a 5-minute candle to close above that resistance, right here, if I get a 5-minute candle that closes above this resistance area and then I start making higher lows, that's my confirmation to take this trade to the upside and my bigger resistance level here. All right. All right, to wrap it up, support and resistance are the foundation of technical analysis. Support is the floor where buyers step in, and resistance is the ceiling where sellers step in. These levels reveal psychology, they create structure, and they give traders an edge. If you can master these basics, and every once you master these basics, every other strategy you learn will make more sense. All right? All right. I have about 4 more minutes. So I want to open it up to questions. If you have any questions about how to identify support and resistance, or you have any questions about how to trade support and resistance, I would be happy to answer those questions for you. In the meantime, I'm going to pull up an SPX chart right here because I took some trades. Uh, I draw my zones a little different because um, am more detailed with where I put the support and resistance zones, but the whole basic concept is the same. Today I took this would have been a scalp type resistance zone here. I took this trade, I went short, right? I bought puts. And this was my target area, a shorter term floor here because I was just scalping. And you can see I bought them at $6, sold them at 14. Then I tried the trade again. And this is an example of when that area was broke. And I lost 220 here. So I made 800 here. I lost 220 here. But this is an example of I went ahead and tried the trade a second time. And guess what? It broke above this resistance, and that's when I stopped out of my trade and took my loss. Alan asked, would the open be resistance for today on SPX? Absolutely. So if you look, Alan, on let's just keep it on this 5-minute chart. I don't want to erase what I have written here. So we're going to go like this. So let's look at the price action yesterday on SPX. And just looking at a 5-minute chart, I can see I have a ceiling here. And then I would put the bottom of that right there on that big candle down where we created a little topping wick here up near yesterday's close. This would be my resistance level on SPX. And then if I'm looking for a floor or support, I'm going to my biggest right? My biggest area of support, and I can't go all the way back, but is going to be right in here where I have two times price came down to this 64.43.44 level and price bounced from there. So I would put that as the bottom. And then I would just use this bottoming wick here and I would create a floor here. I have a secondary floor right in here. I got a bottoming wick and I got another bottoming wick and then nice candle structure, price pull back close right here. So this would be a more of a scalp type of floor, right? So I could play this for a scalp type trade back to that area of resistance from this morning. All right. All right, guys, that is my time. If you're not a member of Simpler Trading, I want to encourage you to check us out. We have $7 trials where you can come into the rooms, whether it's a trendy room with me and Trendy John or another room at Simpler Trading. For $7, you can come hang out with us for 30 days. That is an awesome deal because I truly believe, guys, we have the absolute best community of traders, especially if you're just starting out in trading. Trading can be very lonely, and we have a community of traders and a community of members that are absolutely amazing. They are supportive, they are very educational, and we take pride in, I believe, being the best service out there for traders. So make sure you check out the description for a link of how you can take advantage of that 7-day or $7 30-day trial. And be sure and watch the videos and learn more about how we trade and possible setups going into each and every day. All right. I hope you have a great rest of your day, and I look forward to seeing you in the next video.